Welcome back. Well, the markets are holding high with a gain of close to around 60 points. Another day, another record high out there. Only today, the worry for me is that the mid-cap index, after outperforming for two sessions, well, that's taken a bit of a break. So the mid-cap index is down close to around 0.3%. Let's see whether or not there is some bit of recovery from here on. But one stock that's done very, very well is IRCON International. The stock is up big time. It's up close to around 40% actually in the last 1 month. The company also recently emerged as the lowest bidder for around 390 crore construction project at Bhavati Canal. Well, Mr. Yogesh Kumar Misra, the chairman and managing director of the company, joins us on the show. Hi, Mr. Misra. Thanks so much for joining in. Well, the street is clearly excited, post you delivering numbers. And one thing that stood out was the margins. The standalone business margins improved to around 7%. Most on the street were baking in a number of around 5.5%. Do you think that you can hold margins at this year? And also your revenue target for this year was around 9.5 to around 10,000 crores odd. Do you stick by that or do you want to up that? Go ahead.
Yeah, I think thank you so much. Considering that, and for these two quarters are most difficult for any infrastructure company because of the rains, festival season, and also there was a volatility in the commodity prices. Still, we have managed to do well and, managed to get good set of both revenue as well as margins. We are pretty confident that we'll be able to maintain these margins, in the coming quarters. And the revenue targets that we had given, about 25 to 30% more than last year, which is around 9,500 to 10,000 crores, is what we expect to achieve during the entire year. And maintaining our margins. So I think we are pretty confident about that.
Margins, so just to clarify, standalone margins were around 7%. So you're going to maintain that, right?
Yes, exactly.
Got it.
Morning, this is Rima here. Just wanted to get a sense on the ordering from here on. Your order book is roughly 40,000 crore rupees. Last year, the order inflows were 15,000 crore rupees. But in the first half of the year, the order inflows was just 331 crores. Very, very muted. And you've indicated that you've gone slow, purposely because you wanted to focus on kick-starting the orders that you had won previously. But could you give us a sense that what is the order inflow we should expect in the second half of the year?
Yes, Rima, I think you guessed it right. We secured a lot of orders in the last year, about 15,000 crores. In fact, in the last 5 years, we have doubled our order book from 22 to 44,000 crores. And as you can see from the orders that we secured last year, we have moved into many new sectors like the high-speed rail, like the solar projects. So there, we needed some time to really develop our execution capabilities. These are new areas for us and obtain confidence before venturing into new projects in these areas or in some other areas. So that's why this first 6 months has been muted in terms of order inflow. We are now looking at sizable business opportunities which are coming up as EPC contracts, both in the railway sector and the highway sector. And we are planning to bid now for some big ticket projects, and we hope to secure some of them. We have bid in some foreign projects as well, and but we were not very lucky to get one of them.
Mr. Misra, sorry.
Do you think FY23 order inflow can exceed FY22 order inflows because you are now aggressively bidding?
No, I said we are not aggressively bidding. We are looking to maintain our margins. So so after this consolidation that is happening in the first 6 months, we will now gradually increase, trying to get more projects in the next 6 months. But then it is, I'm doubtful that we'll be able to secure as much projects as we did last year. But we definitely are looking at securing maybe 5,000-6,000 crores worth of orders at least in the next 6 months.
Okay. Mr. Misra, hi, good morning. What's the split between government and private projects, sir, in your order book?
No, we don't work for private contracts, but what I can tell you is we have nomination projects and we have bid out contracts.
Correct.
Right now, our mix is in the about 50-50. So now we have about 50% projects which are bid out, in the competitive bidding, and 50% nomination, because the Ministry of Railways has stopped giving us works on nomination. So we have now picked a fair share of the projects from the market, and still we have been able to maintain our margins. So that way, I think our performance has been really good.
Right. And why is that? Why has the Ministry, is this a policy decision? Nomination work is stopped, you said?
Yes, it's a policy decision for all the PSUs,
Everybody.
not just for everybody.
So generally, I mean, I'm assuming that nomination work margins would be higher, right? I mean, if you're bidding, you'd have...
No. I think the nomination margins, in fact, were limited margins. So there was a cap on the total margin that you would get. In a competitive environment, depending on the type of project, type of work, depending on how much competition is there and how good you are in working out the costs, you can have, in fact, better margins in some projects. And we are also bidding for now consultancy contracts, which typically have a much higher margin in the range of 15-20%. So we will have a mix of that also to improve our overall margins.
Okay, all right. Mr. Misra, the takeaway that I'm getting is you're confident on maintaining margins, and also you're not bidding aggressively, but your focus is also on margins, which is spelling good news in the years to come. My question to you is, your order book is looking great at more than 40,000 crores. Do you want to give us a guidance for FY24? How are things likely to shape up? The order book is there. Now it's all on the execution. So a rough number out there?
I think next year also our revenue should be maybe it will be better than this year, but not so much. Maybe not in the range of 25 to 30%. But definitely we will be either able to maintain these revenues also, or increase it by 5 to 10% based on whatever orders we have right now. And I think all our projects are in execution stage. They are all doing well. So so we will be able to, I think, maintain that.
You're saying revenue growth for the next year is around 5 to 10% as of now. You could revise the number. And final question, sir, what about monetization of the road or other assets? That's a trigger that the stock market is looking at. Any rough number or timeline that you could give us?
No, monetization of assets is a long process. We have just started, exploring the options available to us, and this is not something that we can decide on our own. We have to get approvals from the ministry, DPAM. So, but we have started exploring, our what is the valuation of our assets, what is it that we can really realize, and then based on the guidance of the ministry, I think we will take a call on that.
You said you're exploring consulting orders where the margins are significantly higher, 15 to 20%. How big is the opportunity according to you for you?
No, in terms of revenue, it is smaller. The revenues that you realize from consultancy projects are smaller. So, but then, even if I am able to secure 100 crores, I am able to get about 20-30 crores on that, in terms of percentage, it becomes much better. So right now, the consultancy contracts, that we target is about, say, 500 crores. So maybe that could result in a revenue of, margins of about 75 to 100 crores.
All right, fair enough. Mr. Misra, great speaking with you, sir. Appreciate you joining us and running us through, all of that. A lot of detail coming through on IRCON.